Welcome to the Slop Temple. We pray this video helps.
You start by confirming your brokerage is funded and permissions are set. That lets you act quickly when TSLA moves. Once your account has cash, create a focused watch list and set price alerts so you don't miss entries. You should decide position size based on risk. Risk no more than 1–2% of your capital per trade. Then place a small test order, limit, or market depending on liquidity to validate execution and fees before scaling up. Once your test order proves execution, pick a concrete strategy. Straight buy for trend, limit entries for price control, or an options spread for defined risk. Then place the trade with attached stop loss and take profit orders. This automates discipline and prevents emotional exits. Make sure to size positions relative to stop width so you don't overexpose. Monitor intraday volume and VWAP for conviction, and adjust if company news or You finish by exiting per plan. Take profits at your target or trail a stop to capture extended moves while protecting gains. After closing, log the trade metrics and rationale so future decisions improve. If something goes wrong, orders not filling or unexpected slippage, first verify market liquidity and order type, then inspect fee structures. Contact broker support if discrepancies persist. Finally, review the trade within 24–48 hours to refine your setup and risk parameters for the next TSLA opportunity.
Thanks for watching. Consider subscribing if we helped you.